Hey everyone, Couch Investor here with another video for you today. This will be the last part of the casino series. We have covered NGM and WYNN, and today we're going to cover LVS. That's Las Vegas Sands. It's also one of those three are actually one of the biggest casino corporations or companies in the world. They operate in Las Vegas and obviously also in China. That's why I wanted to cover those three. Now, in the middle, I've put just a video on my personal opinion on 5 stocks that I wish I'd picked up um, during the crash. And same with the other two casino videos. If you haven't watched them, I think they're gonna pop up right here or here. So go do that. Before I continue, again, I want to thank everyone that has recently been subscribing. We are now hitting 84 subscribers, so really close to the 100 subscribers goal for the end of the month. If you haven't subscribed, would really appreciate it if you did. Hit that subscribe button, hit the like button, and comment if you have something to say in the comments below. As always, articles, timestamps will be in the comments or in the descriptions below. So let's get started. Alright, so as I said, Las Vegas Sands Corporation, or LVS ticker symbol, it went up just like all the other casinos went up the other day. I'm filming this on Saturday, and this will probably come out Sunday or something like that. So stock price shouldn't change. Nothing should change. That's the advantage of filming on the weekend. So basically, as you can see, everything went green. The last earnings they beat. Revenue grew a little bit, but all of that we will see in the balance sheets. Now, before I jump into the balance sheet, the peak this year was $74. It went all the way down to $37. So that's a decline of almost 50%. Since then, it went back up 24%. So not that much compared to the other stock. It does have also, it seems to have a bit of a double bottom. So that could be a good sign for us. So yeah, overall that's the stock price year to date. You could see 1 year ago it will always be between the $70 and the 50 something. So this little crash here, this double bottom, could be reassuring for us to go back over those $50 mark. Let's just dive into the balance sheet, shall we? First, I will have to change the all-time high, was $71 or so. So as I said, ticker symbol LVS. The current price, well, the closing price of Friday was $47. PE ratio of 13.44, which is okay, reasonable. Dividend yield 60 cents for the year. Now it's in red because they won't be paying dividends. They are cutting their dividend payments to have more cash to survive this whole situation. We're going to talk about that later on. Their 5-year average PE is 21.14. As we said, they beat their last earnings, and all-time high was around $71. Now, let's jump into these numbers here. They have $4.2 billion in cash. Their revenue was $13.7 billion. Cost of revenue 6.8, which leaves them with 6.9 in gross profit, which is reasonably okay. Total operating expense of $3.11 billion. Operating income $3.78 billion. Now cash and assets, receivables, $844 million. Inventory $37 million. Prepaid expenses $182 million, which means there's a total of $5.3 billion. Now non-cash assets, property $27.6, depreciation of $10.4 billion actually. It's high, but it's what it is, which brings us at a net of 17.1 approximately billion dollars. Intangible assets 42 million, others 454 million, which brings a total of 17.9 billion dollars, which is a nice number if you take both of them together, especially if you see the liabilities. short-term and long-term is lower than the total of the non-cash assets, which is very good. So short-term 3.2 billion, long-term 13.4. Very high margins here, 50% gross margin, 27.6% operating margin. Now let's break down the short-term liabilities. So short-term, they owe just 70 million. Accounts payable 149 million. Accrued liability 1.4 billion dollars. Deferred revenue, that's revenue that they still have to collect, 582 million, which brings us a total of 3.2 billion dollars, as we said here. Now stock repurchasing again, 754 million dollars. It's too much for me, especially if you see that their cash pile is 4.2. If it was, let's say, 300 million, that would be okay. But again, I think stock repurchasing for companies shouldn't be an option anymore nowadays. Last year's earnings per share was $3.5. This year their estimate is 1.54, which is higher than the other stocks that we've seen. Some are already in the negative, some are 5 cents or so, but this could change. This could change. It's just estimates. There are 771 million shares outstanding. Sorry. Again, dividend payments was 60 cents. Now they just canceled that. Current valuation is 35.9 billion. Earnings 2.7 billion. Valuation versus previous earning, which is total rate of return, return on investment of 13.2, which equals usually the PE. So let's say you buy the whole thing right now with the current with the previous earnings, but current valuation, you will make your money in 13 years. Current reflection of earnings, that's 1.6. So if you think that they will go back to their previous earnings, which is 2.7, then you might want to start investing in these stocks, because you see there's $1 billion difference in earnings. Now stockholders' equity is 5.1 billion. It's in orange here because I think it was a bit less than previous years. We can see that right here. So stockholders' equity, exactly. It's been going down for a couple of years now, which is not a good sign. But it was 6.1 in 2016, then 6.4. Okay, it went up, but then it went down drastically 2 times, one after the other. You would like to see it go back up again. That means you have more equity in your portfolio. But again, looking at the overall numbers, I think it's a solid looking balance sheet. Obviously no dividends anymore, and stockholders equity will probably also be a bit lower at the end of the year. So we should look at this again maybe in 12 months or so, but overall I think it's an okay looking balance sheets regarding looking at the current situation. Now let's go and look at some articles. Before I do so, I just want to mention that Las Vegas Sands is operating in Las Vegas, United States, Macau, China, and Singapore. As you can see here, it has Sands Expo Convention Center, the Venetian Macau, the Persian Macau. It also has the Venetian in Las Vegas, the Palazzo in Las Vegas, and Marina Bay Sands, and other in Macau. Macau is just Las Vegas of China. Marina Bay Sands, as you can see, it's this thing here. It's the famous hotel / casino in Singapore. In case you didn't know, it also belongs to Las Vegas Sands. Now, let's start with this article here. Don't gamble on Las Vegas Sands ahead of its earnings. Investor in LVS stocks may need to deal with a longer than expected slowdown in revenue. Well, obviously, the longer the situation goes on, the longer those casinos will remain closed. Obviously, like I said in the WYNN video, Some casinos in China have opened up again to the public, but with restrictions. There will be a maximum amount of people allowed at tables, distance between everyone, etc. Some people might ask, will casinos get a piece of the pie of these $2 trillion stimulus package? Well, I don't think so. I don't think the government will place casinos in these lists. We can see here earlier in March, the gaming industry had joined airlines and various other groups in asking for government financial help. But now we have the details of the bill. Businesses that receive federal aid will not be able to pay dividends or buy back their own stocks. Like I said, airlines or casinos or whoever will ask for help will not be allowed to pay dividends until they pay back the debt, and will not be allowed to buy back their own share, I think even after they are paying their debt. Now, good thing here is that Las Vegas Sands has indicated that it will not apply for government assistance. We could see this as a positive, meaning the board of directors probably had a meeting or something, and they decided they do not need to create more debt in those balance sheets. Just removing the 6.6% in dividend yields might be enough to survive, and that's why they think they do not need any government assistance. But that could lead to future stock buybacks again that will lower their cash, etc., etc. But at least they will not be in they will not depend on somebody else. Now here we go further into the suspension of the dividend. Las Vegas Sands CEO Sheldon Adelson sees the company surviving the pandemic and emerging stronger. Despite these circumstances, our balance sheet strength will enable us to emerge from this pandemic with all our promising future growth opportunities fully intact. We remain extremely optimistic about an eventual recovery of travel and tourism spending across our markets, as well as our future growth prospects. Now, last thing here, Adelson says the company would continue with, now that's something weird here, announced capital expenditure program in both Macau and Singapore, but will suspend the dividend to have maximum optionality in pursuing its strategic vision and in producing future returns. So for me, it's a logical step to suspend your dividend payments. Probably it will take a year or so until everything goes back to normal, and let's say by the end of 2021 they might bring back dividends to stockholders. Now, it might take longer, dividends might be lower at the beginning, but eventually what an investor wants is to see the company survive and look into a longer window, like 5 years, 7 years, or whatever. So that's reassuring to see the CEO say those things. Now, lastly, Las Vegas Sands to announce first quarter financial results. I think it's April 22nd, so that will be on Wednesday. So before, if you don't want to take any risks, or if you just want to see what the numbers are, did they get hit hard or less hard than what's reported, just wait and see what's happening on Wednesday, and after that you could buy or decide not to buy the stocks. But as always, if you see your earnings call coming up in the next couple of days, don't try to gamble or make up your own mind saying, oh, I think the earnings will be fine, because sometimes earnings are great, but the reaction on the market is the opposite, which is weird, but what can we do? That's why I always wait for earnings, see what happens, and then decide if I will take a position in that or not. Overall, again, I think you can see here the 5-year, it went 2018 all the way up to $80, then went all the way down to 50, 40 at the price of today, let's say. That was because, well, the whole fight or trade war with China and new regulation in China. Macau is the only place in China where gambling is legal. So that's why they lost 40% on the stock. Then it went all the way back up and obviously came all the way down to the point that we were 2 weeks ago, which was lower than the stock was 4 years ago. So if you are a trader, you could have looked at this point for some from a rebound position, could have made a nice trade right there. But overall, I think Las Vegas Sands is a solid company. It's a gambling company, but as I said before, casinos, the casino industry makes more than all the other industry combined. Cruise lines, hotels, airlines, etc. That will conclude my my casino series. If you haven't checked the other ones, go check MGM and WYNN, and as of today, Las Vegas Sands. If you have any requests or whatever, leave it down in the comments below. Don't forget to like, comment, subscribe, and see you all in the next video. Bye bye.